Good morning, everyone. Today is Thursday, January 13th. I'm Marv Eisen from Timeless Dollar. And today, we're going to do something, no, not different. We're going to start today, as we do every day, by looking at the economic calendar to see if there are going to be any announcements that are going to be market moving. And today, January 13th, initial and continuing jobless claims will be announced about an hour before the market opens, and that these numbers, these reports, are not going to be moving the market. The other several announcements are going to be inconsequential to market prices as well. Moving along to the morning news, and I'm looking at CNBC, and the flags are basically all in the green, not by much. Basically, futures are flat over yesterday. And the only news report that I see, and I've gone down this list quickly, is right here, profits for S&P companies. And I'm going to come back to that in a moment. Moving over to the meat and potatoes. This is the S&P E-mini for yesterday, January 12th. And my trading zone was forecasting the prices to be in a range of 46.30 to 47.06, or thereabouts. So our trading range was not pierced except a little, maybe at 11 o'clock. So the market traded above our trading range, our projected trading range. And basically this trading range is based on Taylor's book methods, plus some smoothing averages, calculations that I use to smooth the averages, and generally very accurate, particularly on the range. But yesterday, not so much, and the reason is I'm going to go to the next chart. This is the one-day chart of the S&P. And here's year end, right here. This is December 27th, 28th, 29th, and right into the year end. And we see market up to the high of the year. And to me, this was window dressing for the brokerage houses to tout what a great year they had. So they drove the prices up a bit. But you notice that prices basically topped out here at the beginning of November. And going into December, prices dove, then came back up to November's levels, and then year-end pushed up. Again, this to me was window dressing. And yesterday, notice this spinning top, significant spinning top. And if you notice that spinning top is right at the levels that were put in for the past 2 months. So I generally, I'm a believer in the U.S. economy, but still I don't see prices piercing the highs of last year, of end of year. That's just my opinion. I said I'd go back to a report in the morning news, and I'm going to riff a little bit here. I generally don't do it. This article here, prices for S&P companies rose 22% in the fourth quarter and nearly 50% in 2021. I'm different than a talking head that you see on TV in that I am not interested in driving stock prices up. The Kramers and the Bartiromos, they're only interested in driving stock prices up and giving their prognostications. I'm only looking for what the market is actually doing at the time. And this inflation that we're all subject to, this is a worldwide phenomenon. For companies to be reporting 50% higher profits and then claiming that they have to raise prices because they can't get raw materials or whatever excuse they want to make up, I think it's pure nonsense. This is the same reason why a dog licks himself, because he can. 50% rise in profits? Please. If you want to see inflation go down, stop buying stuff. Okay, anyway, I apologize for the morning riff. But anyway, back to our chart. I calculated the trading zone for today, and I sent it to my students enrolled in my E-mini trading courses. I see a narrowing of the range. The spinning top on the big picture is significant, and I think that portends strong headwinds in the immediate days ahead. Have a great day, trade safely, and I'll see you in my next video.